Welcome to our guide about the importance of cash flow. This video has some really great tips about managing the money coming into and out of your business. But we do strongly recommend sharing the plan you create today with an independent accountant or a business advisor. Right, let's get started. We're going to have a look at the importance of cash flow. Even profitable businesses can fail if they don't manage their cash flow effectively. Cash flow is the lifeblood of every business, whether you're contracting, self-employed, or running a successful small business. It actually means how much money is flowing in and out of your business, showing how much money your business has available at any given time. Forecasting when money is coming in and going out helps you plan for the future, and predicting those all-important peaks and troughs enables you to avoid financial difficulties. This can happen when you have more money going out than you actually have coming into your business. Cash flow forecasts also help you plan for expansion and growth without overstretching your resources. There are some common mistakes when forecasting, like being overly optimistic, so your predictions need to be honest and backed up by data. The most common mistake is just not doing it at all, leaving you vulnerable to speed bumps or financial setbacks. If you'd like to get your business on the front foot, then come and speak with an ANZ specialist to see how we can help support you and your business. Let's have a look at setting up a cash flow forecast. Cash flow forecasts are usually presented as a spreadsheet, but many business owners are using accounting software and work with their accountants or bookkeepers for greater accuracy. For each period, the spreadsheet will have predicted opening account balance, predicted income or receipts, predicted expenses or payments, and predicted costing account balance and any money that is left over. The structure of a cash flow forecast is relatively simple. Try our fabulous ANZ cash flow forecast calculator to get you started. The end game is to get your forecasts as accurate as possible, and the best way to achieve this is by doing it regularly. Try to make it a priority for you and your business. Now let's get started. Forecasting sales. To fill in the forecast template, you need to know how much money is actually coming into the business. The first step is number 1 on the template, which indicates where your sales and income figures go. Itemize key revenue streams, and it helps add additional lines for different products. To decide what goes in the sales cells, use previous figures for your estimates. If you don't have figures, for example, if you're just starting out, you'll need to make some educated estimates. To help you do this, talk to an expert with experience in your industry, or contact an accountant or industry associations and organisations like the Chambers of Commerce. Another source of good information is Statistics New Zealand's industry profile tools or Inland Revenue's industry benchmark figures. This can give you an idea of your potential sales. Otherwise, look at your month-on-month sales from the previous year and find a conservative number that seems realistic. Remember, if your business is affected by seasonality, reflect that in your cash flow forecast. Also, have a think about other cash coming into your business apart from sales. These could be things like interest payments, loans, investments, or additional cash injections. The forecast requires you to make assumptions, but resist using the best case scenario. It's really better to be realistic and conservative, especially in your sales revenue estimates. But do make sure you note the assumptions you're basing the figures on. This shows anyone reading the cash flow forecast how you arrived at them. Always remember the forecast won't be 100% correct on the first go, and that's okay. The more you do it, the better and more accurate you will get at it. Let's have a look at forecasting outgoings. The next job is to start forecasting your outgoings, or more simply, how much money are you likely to spend? So number 2 on the template is where you enter expenses and bills for your business. We've made it easier for you and we've added the most common ones, but if you can have other expenses not listed here, put them in the other fields. Start by listing all your recurring and automatic payments, then record any one-off payments you may have. Look at previous bank statements to find costs that aren't top of mind and consider any planned future costs. If you're unsure how a large cash item might be, or when it might come into and out of your business, a bit of research can really help you here. Then you can estimate when this will hit or how big it might actually be. If you do make assumptions, be sure to note them down and refer to them later. Always include GST in all figures for both cash in and cash out. And this is a good time to talk to your bank about opening a separate account for this specific purpose. Getting a pair of fresh eyes on your figures can be a really good idea. So asking an accountant to look over your numbers means they could spot things that you've actually missed. Lastly, you need to enter the amount of cash in the bank at the opening of the first month. Then the calculator will automatically work out the closing balance for you. So let's have a look at using your cash flow forecasts. Now you have a working document you can start to use. Look at your forecast to see if there's a chance of any upcoming cash shortfalls or surpluses. What you're specifically looking for here is the line which shows the closing bank balance, telling you how much money you have left in your account at the end of each month. If you do see a shortfall, don't panic. Forecasting means you can take corrective action and address it before it becomes a huge problem. And as the saying goes, forewarned is forearmed. Now I hope you can see the information from your forecast can help you make informed decisions about the immediate and also the future of your business. Check out our guide, Improve Your Cash Flow, with these handy tips, or please do reach out and talk to an ANZ business specialist about solutions that can help address any shortfalls you may have. Remember, most businesses experience some level of cash flow difficulties as they develop, so you are not alone. If you do identify a surplus, I want you to consider how you can best use that money. You could put it into an interest-bearing savings account or term deposit, or use it to grow your business, like purchasing new equipment or investing more in marketing. Now for a bit of future planning. You can use your cash flow forecast to assess the impact of many business decisions. Say you may be thinking of expanding or hiring new staff, which is really exciting. Factor into your forecast the likely cost of all that investment and the expected increase in revenue to see what it may mean for your bottom line. We often get asked, how often should you do a cash flow forecast? Most cash flow forecasts are monthly, but that might not suit you. If you operate a retail cash-only business, for example, like a hairdressing salon, consider putting together a weekly or daily forecast. This way you'll be able to spot potential pain points within the month. If you're a builder or perhaps a quantity surveyor, getting paid for your work may take months. So a monthly or quarterly cash flow forecast may be more appropriate for you and your business. So let's have a look at comparing forecast to your actuals. The key is to review your completed cash flow forecast regularly. What you want to do is make sure you compare the forecast to how much cash came in and out of your business. Your accounting software will provide the figures. A good idea is to have reviews. Reviews help you forecast more accurately over time and identify trends you need to address. So what's the big picture regarding the health of your cash flow telling you? If your sales are lower than you forecasted, you'll need to find out why. It may be that a competitor is undercutting you, in which case you may want to review your pricing strategy. We've got a really great article, Pricing Strategy Made Easy, so this may be able to help you here. So the key to getting ahead is just getting started. Jump over to our BizHub and download the cash flow forecasting PDF to start your cash flow forecasting journey today.